Hi, everybody, it's FIBO Group, and you are watching to the Market Watch review. Asian markets fell, with the Hang Seng leading market falling more than 1.5%. The European STOXX 600 dropped by around 0.75%, while the American S&P 500 fell more than 1.7% today. It seems that the Fed created the conditions for the Fed's policy rate to rise faster and at a higher level than anticipated. This pushed the dollar to a new two-decade high. The US dollar rose and the Federal Reserve raised rates, reducing the appeal of gold. Gold prices fell by 1% Thursday. Oil rebounded after falling 1% in its previous session. This was due to concerns about tight supplies going into winter. Asian Pacific market. Asia's attention was on Bank of Japan, which had previously stuck to its loose monetary policy and dovish policy guidance. Japan intervened on Thursday in the foreign currency market to purchase yen for first time since 1998 to help stabilize the battered currency. This was after the Bank of Japan had maintained ultra-low interest rates. After trading over 1% higher earlier due to the BOJ's decision not to change its super loose policy, the dollar plunged more than 2% to a low of 141.15 Japanese yen. The Australian dollar rose but was faced with resistance from 0.6655 to 0.6670. Market of Europe. Sterling fell to $1,122,525 for the 37th consecutive year. The Bank of England could be the last hope for any sterling bulls. Although inflation is at a low point of 40 years, Britain must still manage with slow growth, free spending government, and tight labor markets. Swiss National Bank exits negative rates era. On Thursday, the Swiss National Bank raised its policy interest rates by 0.75%. This is only the second increase in 15 years. It also stated that it cannot rule out further increases as it joins other central banks in tightening their monetary policy to curb inflation. The resistance level at $0.9880 was reached by the euro. Market of America. The Fed was more hawkish, and the median dot expects a 125 BP increase in target rate in fourth quarter. It was evident that the Fed is projecting that target rates will stay higher for longer. The target rate will rise to the neutral level in 2025. On the back of projections and Fed moves, the dollar rose. Although the dollar may continue to strengthen in the near term, it could still be on the rise. The Canadian dollar fell sharply to 1.34 against the Canadian dollar today, but is still within the local uptrend. That's all for me. Closely monitor the news background and be prepared for all the surprises of the market.